Welcome to XM.com. You're watching today's Daily Market Comment by Raf Boyajian. I'm Cristina Marujos. Jitters about how further spikes in inflation might begin to hurt corporate earnings as well as spur the Federal Reserve to hasten its tapering timeline weighed on Wall Street on Wednesday. The S&P 500 and Nasdaq Composite closed about 0.3% lower yesterday, while the Dow Jones fell by a steeper 0.6%. The losses came despite an impressive set of earnings by America's retail giants this week. However, there's been no hint from the Fed that it's even considering altering course on tapering, and the real debate is around the timing on liftoff and how many rate hikes would follow after that. Markets are likely just nervous given the uncertain inflation outlook, and Wall Street futures are back in positive territory today. The recent plunge in the euro is likely aiding the buoyant mood in European equity markets. The single currency is down more than 7% versus the US dollar in the year to date. However, the sell-off appears to have eased overnight, and the euro has rebounded slightly from yesterday's 16-month low to climb back above $113. The pound, meanwhile, is extending its steady recovery from last week's lows as investors grow more certain that the Bank of England will hike rates in December. However, today's biggest gainer is the New Zealand dollar, which jumped around 0.6% after the Reserve Bank of New Zealand's quarterly business survey indicated inflation expectations by firms are sharply on the up, bolstering expectations that the RBNZ might raise rates by 50 basis points at its policy meeting next week. The greenback was softer but steady, edging marginally lower against the basket of currencies. By far, the biggest loser on Thursday was the Turkish Lira, which continues to plummet across the board, hitting a new all-time low against the dollar. Turkey's central bank is widely expected to slash interest rates again later today when it announces its policy decision. Crude oil prices were headed south as well amid a push by Washington to get other countries on board its plan to release oil from strategic reserves. Although no decision has been made, China seems willing to join the U.S. in coordinated action to relieve the pressure on soaring fuel prices. WTI futures were last trading at 6-week lows below the $78 a barrel level, while Brent futures were defending the $80 a barrel level. This was the Daily Market Comment. Thank you for watching at XM.com.